Hey, good morning, ladies and gentlemen. Welcome to another episode of the Wilson Weekly with Chief Economist Dr. Andrew Wilson at My Housing Market, where we bring to you insights into the Australian residential property market onto the Money Mentor podcast, where we like to inform you on making informed decisions into the Australian economy, so you don't have to listen into the property bank forecasts out there and the pessimistic sort of lamestream media that's carrying on. So we like to give you the data and make informed decisions here. And it's great to have you again here for another week, Doc. How are you?
Thanks for that intro. And of course, there's, I guess, not as much pessimism around now as we've been used to over the journey. We can sort of get away from the doom and gloom, which is really finished now. But we've got today we had a bit of a preview last week of how house prices were tracking over August, which of course is the last month of winter. Today we've got the official results for the August quarter. Some interesting results. So we're out of winter. Yes, goodbye winter, and hello spring. Yeah, let's get warmer. But of course, the real warmth will come with the housing market performance, because of course spring is the strongest season of the year for buying and selling. We're already seeing some clear results from that. We've discussed that over recent weeks with a clear uptick in the weekend auction markets, particularly with listings. And we had a continuance of that last weekend, and we'll have a look at that at the end of the show. But yes, hello spring. If you're down south, you'll be looking for the blossom. And of course, you'll be dusting off your togs if you're a little further north. But
spring is here.
Spring is here. Spring has sprung. And, well, not for a couple more days, but it will be interesting to see how our spring markets perform. But there's no doubt that the portents are very positive for a positive spring performance. We shouldn't be surprised because that happens every year, notwithstanding what's happening generally with the cycle. But I think what we've seen occur over winter, particularly over August, has certainly provided a very strong platform for the usual spring rise in buyer and seller activity. We also have, so I look forward to that, of course, today, the latest prices and home and unit prices in capital cities over August. But also we've got some significant economic data that's to come out over the next few days. We had retail sales released from the ABS last week. We'll have a look at that today. But of course, the big game is next week when the Reserve Bank will meet to decide where interest rates are going over September. And I think that certainly the odds are shortening that we'll get another pause. So the data has certainly been supportive of the Reserve Bank's decision to pause rates 3 times over the last 4 months. We've been a little bit not sure about that. But the data is now slightly supporting the decision to wait and see. And that's continued the data that's come out recently in terms of perhaps another pause. We have some important data to come out later this week, which will be the inflation data. And of course, that will be a key to how the Reserve Bank jumps, whether it does pause again. But no doubt the other data that we've seen this month is certainly looking like it does support a bit of a wait-and-see attitude at the moment. We've seen the unemployment. We've discussed that here, of course. The unemployment rate ticked up a bit to 3.7%. Still very low. Let's be clear about that. But it shows an easing economy at the margin over the month. And we also saw some increase in unemployment rates on a capital city basis. Perth and Sydney are still maintaining their leadership role in terms of the lowest unemployment rates, particularly that Sydney market, which is just tracking still above 3%. But Brisbane and Adelaide have started to move over 4% unemployment rates, and that's what's accounting for the national result pushing up slightly. We also saw the number of jobs created fall, or the number of jobs fall over August following a big rise. Over July. This is July unemployment data, of course, following a big rise in June. You also saw the number of unemployed increase sharply over July. And again, that was different to what we reported or what the ABS reported over June, which was a big fall in unemployment. So, look, as we've discussed here, we need to take some of this data with a grain of salt. There are some issues, in my opinion, with the seasonal adjustment models coming out of the ABS. And, of course, that reflects the ups and downs that we had through COVID lockdowns. But you can only go with what the data is telling us. And the Reserve Bank would be encouraged with that labour market data. Of course, we also had wages data, which we have discussed here, released over the past few weeks. That's the wage index from the ABS. And a little surprisingly, the annual growth in wages actually was lower over the June quarter than over the March quarter. So we tracked down to 3.6% annual growth in wages compared to 3.7% annual growth over the March quarter. So, look, that's a little counterintuitive because we've had this very, very strong labour market, record low unemployment, number of jobs surging, unemployed numbers falling overall this year. And yet we saw the rate of growth of wages actually lower over that June quarter. And, of course, the wages data is very, very important in terms of inflation. Now, we know that the Reserve Bank's main game there is to get inflation back to that 2 to 3% underlying target. They're at 6% still, so they're still a way off. And I think, guys, that perhaps means down the track some more interest rate increases. But the wages data certainly was exactly what the Reserve Bank would have been looking for. I thought we'd get, be close to 4% annual growth. It was only 3.6. Again, maybe we have to take some of this data with a grain of salt because it's sort of not adding up to some degree. But it is what it is. And as I said, it's just another factor which points to another pause in interest rates next week. And, of course, as I said, we have an easing in the wages growth when we had a softening in the labour market. So it will encourage the Reserve Bank to perhaps think that they've been doing the right thing with pausing over the last few months, which we've been a little critical of. But nonetheless, I guess the joker in the pack is the price of fuel, which is continuing to rise, unfortunately, and that'll work its way into inflation. But I do think that the likelihood is of a pause, another pause for September. So good news if that occurs for mortgage holders. And really good news for the
also for tenants.
But and for the spring housing market, that'll keep confidence ticking over. So, shall we get started on our presentation? I think.
Let's not muck around, Doc. Let's get into the data. Plenty of data to go through again this week. So,
I've done enough
live data here.
Of course, My Housing Market is my particular brand, and we work together with Infinity to provide, as you said at the beginning, clear insights for those decision makers in property, buyers and sellers. We're all about looking at the current state and future prospects of housing markets, and it really is about the current state. So we're always talking about the latest data, not just prices and rental data, but also the latest economic data, which is important, particularly in relation to interest rates. And interest rates have been the focus of housing markets over the last year, of course, because they do have a significant impact on housing market activity, particularly confidence in the shorter term. But I think confidence is back in spades in our housing markets now, and we're likely to see that unfold even more over the next couple of months in the spring selling season. So we did have some more economic data. I've just discussed, I guess, at some length, the data over the month so far, which has been, I guess, a little softer and perhaps, as I've said, supports the Reserve Bank's position on rates in terms of pauses. But we also had July retail sales out just recently, so we can look at that. Retail sales were higher, which was interesting. They're up by 0.5% over the month, and they've now increased by 2.1% since July last year. So that's over the past year. Now, so that actually sort of goes against what we've been saying about a weakening activity, because this is strengthening activity with retail sales. And of course, retail sales are a very important indicator of how consumers are feeling about things. They're out there spending. Well, that's good news. If they're not spending as much, well, it shows perhaps interest rates are impacting their decisions. But we did have a rise, and that followed the 8% fall we had over June. And that, again, I'm a little bit questionable as to, or I'm questioning some of these results. The ABS blamed the lower result over June on weaker than usual spending on the end of financial year sales. And the extra activity that we saw in May, because we had a rise in May, they blamed on extra discounting and promotional activity. So, I'm not sure that sort of holds water. We've spoken about that, whether, in fact, there was other evidence that there was weaker mid-year sales and stronger May sales. But certainly, that it bounced back again. So it's sort of up one month and down the next month. It's a little bit volatile, and yet the seasonal adjustment is supposed to fix that up. It's supposed to take the volatility out of the series. But as I said, we've certainly got issues with seasonal adjustment modelling as a result of the last couple of years and the COVID lockdowns. But just looking a little bit closer at the figures, that 5% rise, look, not too bad. And the fact that we're up to 2.1% since July last year. But when we look at the trend data, the trend is certainly flattening. So we're not growing as strongly as we were in terms of retail sales. And of course, it doesn't account for the increased price of goods due to inflation. So we're not really discounting that increase for what is higher value of retail sales in relation to actual paying higher prices, because, of course, prices for goods are rising as a result of inflation. So I guess the RBA could be encouraged again by that data, which shows even though retail sales increased, the trend is now starting to flatten out, which shows perhaps that higher interest rates are starting to impact consumer activity. And there's the chart for retail sales. You can see that the recent trend has now flattened out compared to where we were last year. It was a lot steeper, the incline of the chart. Now we're just sort of getting a little flatter in terms of retail sales. So again, even though the numbers were higher, even though, there's some questions over the volatility of the series recently due to perhaps the seasonal adjustment modelling, there's no doubt that the trend has eased. And again, I think this is another positive input for a pause in rates by the RBA next week. So we're really ticking all the boxes at the moment, and we've just got to wait for the inflation data that's coming out for July at the end of this week. But as I said, we've just got to mention that fuel costs are really starting to bite now. We have to really keep an eye on that one because it does have a significant impact on inflation. I think petrol at the Bowser now is just about over $2 a litre everywhere. Maybe not in Queensland yet, but certainly New South Wales and Victoria have those higher petrol costs because the price of oil has accelerated. So that's our sort of economic overview and our sort of slight preview as to what will happen with official interest rates next week to begin the spring selling season. And as I mentioned, if it's a pause, hey, that's another positive for growth over the next 3 months.
Absolutely,
so
it is.
Look at the latest home prices. We did have a preview of this last week, but this is the finalised data. Obviously, not a lot of difference from last week's results. But we did see house prices rise again, national house price up again over August. Of course, this is quarterly data. that compares each month's quarter with the previous month's quarterly data. It provides a robust model of housing market activity because you're taking 3 months of a 3-month series of sales and prices rather than just a single month snapshot. So the market continued to report positive results, but growth levels have certainly slowed marginally over the final month of winter. And we can expect that because winter is the quietest season for housing market activity. It's not because of the weather, although indirectly it is a bit because there's a lot of holiday activity happens through winter as perhaps people escape the cold. And that reflects in the mix of properties that come into the market through winter. We typically see a much lower proportion of higher priced properties in the market over winter because that's a dormant part of the market. As I said, distractions through winter. And those buyers tend to be more fixed on waiting till the spring market. And that's what I expect to see during spring, as we usually do, will be a big rise in the number of, or in the proportion of mid to higher priced properties coming into the market, particularly the auction market. And that acts to push prices up anyway because of that, because you're getting a higher proportion of higher priced properties, which acts to have some impact on price outcomes or models of price outcomes. So despite that, sort of moderating impact over recent months, we've certainly still got a very solid a very solid platform for growth, and that'll certainly enhance the prospects for the spring selling season. So let's have a look at the actual results. So we've now had 7 consecutive months, and this is the quarterly data for each month. So that's the 3 months for August versus the 3 months of July versus the 3 months for June, etc. But we've certainly seen now a consistent and solid revival in house prices nationally, 7 months in a row. As I mentioned, the rate of growth was slightly lower over August compared to July. We can see there that the national rate of growth was up by 0.7%, which was just a little bit lower than that 0.8% that we recorded over the July quarter. But we had 2.1% recorded over June, which was a very strong result. And in fact, when we compare the autumn period to the winter period, we've seen house prices rise by 2.6% over that 3-month period, over the full winter period compared to the full autumn period. So that's obviously good news. If you multiply that by 4 for the full year at that rate, you have certainly well above a double figure result. But when we look, we can see there that was the bigger markets in Melbourne and Sydney that dragged the chain a little bit, still increased, but Sydney just up by 0.2%. Melbourne up by 0.6%. As I said, no surprise there in a way because they're the capitals that are most affected by the property mix through winter with fewer higher priced properties for sale. So, yeah, just easing off a little bit there. Melbourne and Sydney still rising, but not as strongly as previous months. Brisbane still, in fact, the Brisbane market's now starting to look like it's building up ahead of steam. Up by 1.3%, very good result there. Adelaide up 2.6%, and Perth falling away a little bit, up by 0.7%. So I think that what we're seeing from this is a typical winter easing in growth rates in the big markets of Melbourne and Sydney. I think Brisbane and Adelaide, particularly Brisbane, Brisbane is really building up a bit of a head of steam coming into spring. Adelaide also strengthening. I think the other interesting point is that we're seeing a weakening in the Hobart market. That trend is now consolidating where Hobart, which tends to be a bit of a contrarian sort of market, it rises when others are falling and falls when others are rising. But certainly the Hobart market, after some the last couple of years of very strong growth, is now tracking backwards and easing. When we look at the year-to-date data, I think this is just reflects the strength of our revival in housing markets. This year, Sydney market up nearly 8% over the first 8 months of this year. So I think
wow.
the market with the spring selling season to come is certainly on track for a double-figure result this year. And, we might get as high as 12% increase in the Sydney median house price this year, which will really set a lot of those doomsayers well back on their heels because that's almost the complete opposite to what was predicted by many for this year. Again, I point out Brisbane up by 5.8%, good result there this year so far for Brisbane. Similarly, Adelaide and, of course, Perth, which is in second position in there in terms of the major capitals' growth rates, up by 6.5% this year. So a number of them, and Melbourne, maybe just eased a little bit lately, Melbourne, but still up by 3.8% this year so far. So I think that a number of those markets, certainly Sydney, are on track for a double-figure result this year so far, particularly with the stronger part of the market coming up and with, I think, some upside potential regardless of the higher mix of prestige property. I think there's still some growth left in prestige property, which has been a bit of an underperformer over the past few years. And when we look at the year, the full year, Sydney's up by 4.3% over the full year to August. Melbourne up 2.7%. Brisbane up 2.4% over the full year. And, of course, we know that prices were still falling at this time last year. So those numbers will pick up quite strongly. And although I haven't got the data here, I think it's also interesting when we look at where our house prices are in terms of their previous peak results. So that is at their record levels. Now, Melbourne and Sydney both reached record highs in March last year, over the March quarter last year. Now, they still haven't regained that record high level yet. They're still a couple of percent below, around 2.5% to 3% below where they were in March last year. But obviously, they're tracking quite strongly towards regaining those record prices, which they should do by the end of the year and probably sooner. But I think that's part of what's driving the market is that there's still a discount on offer in Melbourne and Sydney because prices are still below their previous peaks. So it's still something that's motivating buyers out there intrinsically is the fact that you're still getting a discounted property, in terms of the models in Melbourne and Sydney. And, that's, I think, part of the demand cycle that has lifted. Brisbane and Adelaide, however, are now back at record high prices, which again reflects, strong results recently in Brisbane and the fact that they didn't fall as far as Melbourne and Sydney did following those peak results last year. So the housing, in fact, the national house price is only a 0.9% below their previous peaks, which was at April last year. So I think, again, some predictable news there in terms of a continuing strengthening in house prices. Yes, not quite as strong as previous months, very similar to July, well down on, not well down, but certainly lower than what was recorded over June, which was the highest quarter this year so far for prices growth. But overall, pushing nearly 3% increase over the full winter market compared to the autumn market. So again, on track for perhaps a full year double figure result. So some interesting results there, predictable results, and it'll obviously when we come to the September results, it'll be revealing to see the impact of the first month of spring. So that's house prices. Unit prices were actually steady over August, following 6 consecutive rises in the national unit price. We actually had a flattening of the unit price over August, over the August quarter. So it broke that sequence of consecutive increases. But nonetheless, I guess it's consolidated what's been strong growth over the year so far. Maybe some winter effects there at play with units in terms of fewer higher priced properties, higher priced units in the market. But nonetheless, Units were steady over the month, but they did break a sequence. Unit prices did break a sequence of 6 consecutive increases. So, and as we saw with houses, it really was all about the Sydney and Melbourne market. A little softer for units over the August quarter. Sydney down by just 0.1%, but down nonetheless over the August quarter compared to the July quarter, and Melbourne down 0.5%. So that's where, obviously, the weighted average basis that we create the national price is affected by the capitals which have the biggest number or the highest number of listings and sales for units. And that, of course, is clearly Sydney, followed by Melbourne. That's the result of perhaps that winter effect. But again, it's very interesting to again see Brisbane with another strong result. Of course, it does have a reasonably significant unit market, but it was up by 1.3% over the month, and well ahead of certainly Sydney and Melbourne, and that helped to bolster the national price being steady rather than being lower as it would be with Melbourne and Sydney lower. So a good result there for Brisbane units. Again, the other markets don't have a lot of units in them, smaller capitals, so they can tend to be volatile from month to month. But Adelaide has continued to report higher unit prices, and again, it was a higher by 0.7%. So if we look at this year so far, Sydney's still up by 4.9%, even with that slight pause over August. Melbourne up 0.8%, a little flatter there, that Melbourne unit market. Brisbane up by 7.4% for units so far this year, and Adelaide up 11%. And that sort of translates to the full year results, with Brisbane units still tracking at double-figure increases over the past year, up by 10.9%, and Adelaide unit prices up by 15.2%. Again, acknowledging that Adelaide market has only a very small proportion of units in its housing market, and higher priced units can have an impact on results. But nonetheless, Adelaide and Brisbane, the clear leaders over the past year in terms of the unit market, but a little softer there for Melbourne and Sydney, maybe just reflecting that winter market impact. So again, here's a QR code for those watching the broadcast. If you want to get a copy of that, a full copy of the August house price report, there it is in all its glory. The QR code. Take a picture of that, and you'll get a link to the PDF report for August. Another nice giveaway. So let's have a look at our weekend auction markets to finish winter. So it was the last weekend auction of winter, and certainly, again, and we know that those weekend auction results, are a very reliable guide to what's happening in our housing markets. That's why we focus on them here, and they've proven to be so, obviously for some time now. But winter certainly ended with auction listings surging, and that's a very good indication of how the market's travelling, because sellers are obviously enthusiastic about placing their properties up for sale, putting them under the hammer. You don't do it really unless you're confident of getting a sale to some degree. And of course, that's reinforced, as we know, with the recent strong clearance rates, which shows that there's plenty of buyers out there happy to secure property. Listings surged, and again, a nice, entree to the spring selling season, showing that we've seen this big rise in listings over the past few weekends. Another surge, those enthusiastic sellers are keen to take advantage of strong housing market conditions. The spring selling season, as we've discussed at length today, is likely to be sharply higher as such strengthening conditions that we've seen over winter reinforce what people will be thinking, and that is, hey, let's get it done and dusted, bought and sold before the end of the year. That's what creates the spring selling season. It's that focus on the end of the year, either buying and selling or doing both, and that's why we see higher property numbers coming into the market and higher turnovers over spring. So these are the results from last weekend. Sydney, another rise in auctions, 736 auctions. Good number of auctions there for Sydney. And look at the clearance rate, 78.9. So we actually had the highest number of auctions so far this year in Sydney for a Saturday. And we still had a clearance rate just a tick under 80%. So how strong is that Sydney market at the moment? Despite, higher listings over the past month, we're still tracking clearance rates just under that 80% result. And that's why we're seeing house prices continuing to rise in Sydney. And you can see when we compare that to a year ago that auction numbers are higher and our clearance rate is significantly higher, nearly 20% higher in Sydney compared to where it was tracking a year ago. Melbourne, a big rise in auction numbers in Melbourne, nearly 900 auctions in Melbourne, which was nearly 200 more than the previous weekend. Now, I think that the big rise in auctions perhaps had an impact on the clearance rate. Clearance rate was down its lowest for a while there at 69.6%. But I think that perhaps in the shorter term can be attributed to the flood of listings coming into the market, offering more choices to buyers, and therefore putting some downward pressure on clearance rates, which, at just under 70% are still favouring sellers generally. But we need to keep an eye on that Melbourne market going forward. It is a market that will be likely impacted by higher numbers of properties going under the hammer over the next few months, particularly October, and particularly in those inner east and inner south areas, and inner city areas where the prestige property markets are at their strongest. But nonetheless, when we look back a year, that the Melbourne market's still tracking higher in terms of listings and clearance rates. Brisbane, a good result there for Brisbane. Fewer auctions last weekend compared to the previous weekend, but a 75.6% clearance rate, which is massively higher than the clearance rate of a year ago. And Adelaide finally got over 90%. It's been tracking in the high 80s. That Adelaide market, just about, any property that doesn't sell under the hammer in Adelaide on Saturday is really a rarity. And Canberra has certainly also consolidated its period with another big number in Canberra. It consolidated its market over the recent period. So that's auction results. Clearly a sniff of spring there, no doubt about it. It is probably a spring result, to be quite honest. And we do see that the last couple of weekends in August are always herald the spring selling season with particularly higher numbers of listings as people start to refocus after the winter break period. And we've clearly seen that in our markets this year. And the big difference from last year is that clearance rates are certainly well ahead of where they were last year. And, of course, we were affected by a lot of negative sentiment with interest rates rising a year ago. So when we look at the trend, we can see there in Sydney, the trend's actually higher now over August, or the results, are higher over August compared to July, and well ahead of where they were a year ago. So a little bit of a winter dip there from Sydney, which we expect in July, but the market's bounced back again, and with a near 80% result over August. Melbourne just easing a little bit, and as I said, we need to keep an eye on that Melbourne market, but the likelihood is that it will bounce back with higher numbers of higher priced properties coming into the market, but still well ahead of where it was a year ago, but has just eased through the winter period, which is what we expect generally. Brisbane, certainly well ahead of where it was a year ago and picking up on what happened over July. I think there's plenty of upside in that Brisbane market generally, as we've seen with the house price and the unit price data for August. But Brisbane has a smaller auction market compared to Sydney and Melbourne, but nonetheless, it's still a reasonable indicator of what's occurring generally. Adelaide, nearly 90% clearance rate over August and well ahead of a year ago, where it was a year ago. But of course, that Adelaide market is Australia's strongest auction market in terms of traditionally in terms of clearance rates, and Canberra again well ahead of where it was a year ago, and similar to Sydney has picked up from the July result. So it all looks like spring to me, but we officially start the spring selling season this Saturday with auction markets, and we'll have high numbers coming through of auctions, higher numbers likely, and it'll be interesting to see how how buyers react. Will we see the same level in terms of buyer interest? I'm sure we will in Sydney and Brisbane. Melbourne's the one to watch out for. Let's see if it can bounce back over spring as it usually does. So you can get those auction clearance rates on my LinkedIn channel, Doc Andrew Wilson. Every Saturday night we have the capital city results coming through around about 6:15, 6:30. And then on Sunday mornings on LinkedIn, we release the national auction report, and that includes regional breakdowns for Sydney and Melbourne. And we also show all the highest price sales, the top 10 price auction sales from the Saturday for each of the capital cities. So interesting to look at where prices are at the top end in terms of those capital city results from Saturdays. Now, as we say to end off every week, how much is your home currently worth? Well, that's up to the buyer, of course, and the buyers to determine. But you can certainly get a really good indication of how the market is performing at the moment through the My Housing Market app, which is available through Infinity, but you have to get a password to access it, and you have to get that through Infinity. So the data is updated daily in terms of the app. And what it does, it's quite comprehensive. It covers every suburb in Australia. There's no modelling here in the sense that you can actually see what the prices are. So what it does is it provides a number of filters. So you can look up every suburb that has data, and this is listings data in Australia, and it will tell you what you can filter it for either a house or a unit or a townhouse. You can filter it for the number of bedrooms, so you can get a 1-bedroom unit, a 4-bedroom house, a 3-bedroom townhouse, whatever, and it will then show you the median price, asking price currently. It will show you what the highest price, asking price is currently, and what the lowest asking price is currently. So it gives you a sense of the range there, as well as the median. And it also shows you the number of properties for sale in that suburb. So just a nice little app there to give you a feel for what's happening in the market. If you're a seller, it gives you a guide to, what maybe you should be asking for your property if you're thinking of selling. If you're a buyer, it tells you what the relative position is in terms of asking prices, and also the number of properties that are currently for sale. So look out for that one. There's the QR code. You take a picture of that, get the password from Infinity, and you're off and running with that particular app. So next week, of course, we've discussed at some length the interest rate decision, which will come for September. Will we have another pause? I think the odds have shortened for another pause with the data over this month. But, the Reserve Bank's been a little bit tricky in terms of its relationship with data. It may feel, we might just have another rise, but certainly the data supports another pause. But, the data supported an increase over some recent months and they paused, so we don't know. We'll have the latest building approval data. Is that still tracking downwards as it has been really over years now? Any improvement in building approval data? And following on that, following week, we'll have the latest house price or house building cost data from that building approval data. Inflation data, we've discussed that already. We'll see the latest inflation data, which of course will help us with our analysis of the RBA decision. And as usual, we'll have the latest weekend auction results for the first weekend in spring. So are you excited? Spring selling season, it's here. What will the results be? Will we get 12% increase in prices in Sydney? Will Sydney continue to track at nearly 80% or maybe above through spring on some weekends? And will the Melbourne market pick up after just a period of slightly weaker activity? And just how strong is that Brisbane market at the moment? It'll be interesting to see how that translates into auction results. So it's all happening here as usual. And I guess we look forward to seeing you all at the same time next week.
Thank you for another big session, Doc, and another invaluable session again. So another big
Thank
week
you.
in the property market. So stay tuned for that one as well next week.
Looking forward to it.
Thanks for your time, Doc. Appreciate your time. See you next week.
Okay. See ya.